Okay. Good to go.
Hey, good evening, everyone. This is Tim Rocco calling in from Scottsdale, Arizona, usually from Chandler, Arizona, but at a meetup that we're hosting tonight for Blockchain 48 here at the offices at Industrious in Scottsdale, Arizona. So we're excited to be with you tonight, giving you another installment of how to profit from cryptocurrency. And again, my name is Tim Rocco. A lot of people refer to me as CryptoRocho, so it's easy to remember. The markets have been good to us here lately. Some of the old coins have moved up significantly, and the wallet and the exchange watching that we've been doing have paid off pretty handsomely since our last call. We won't be talking about that, but we will be talking with Elmer J. Howard on if this continues, this run continues, and we continue to have profits, what we're going to owe the IRS. So Elmer is here in the Valley, and he owns Dollars and Cents Bookkeeping, and he was referred to us by a top PhD blockchain company owner as the person to go to learn about cryptocurrency accounting, the programs that you can use, and also you can use Elmer if you're in the United States because that's his specialty, to account for your crypto profits and losses. So Elmer, are you there?
Yep, I'm here.
So thank you for being here tonight and sharing your information with all the people. On the How to Profit from Cryptocurrency course, we have live trainings every Wednesday evening to keep people up to date on what's happening in the marketplace. So thank you for being here and being our special guest. Hopefully you're going to give us great news. So Elmer, could you briefly tell us a little bit about yourself and Dollars and Cents Bookkeeping?
Yep, we're a accounting firm located in Phoenix, and last year I actually got into cryptocurrency investing, and a friend of mine, Justin, who does due diligence in the business world and also now especially in cryptocurrency, as we were talking about everything, he realized that there was not a lot out there for the the tax piece of cryptocurrency. And so I started looking into it and quickly became an expert as fast as I could to start offering the services and a lot of consulting. I give away a lot of free consulting hours to people who just have questions, because there are very few of us in the United States. I get people calling me from around the world who need advice or need me to help them prepare their tax return with the cryptocurrency piece. I've been doing bookkeeping and accounting since 2009, and I started my own business back in 2015, which is the Dollars and Cents Bookkeeping. And so I've created this webinar. I've done a few of these presentations, and I hope that this is helpful for everybody on the call.
Well, we do too, and we want to thank you for being on the call. So Elmer, I had some people that have been involved in cryptocurrency for a while. I've been involved since 2014. I had some people say to me that the rules changed January 1st. Is there a different definition of Bitcoin and cryptocurrency from years previous?
The only change that I'm aware of is the government decided that they wanted to lock down the 1031 exchanges, the like-kind exchange. So in years past, your accountant could argue that when you were trading, Bitcoin for Ethereum, you were doing a like-kind trade and didn't have to, report the gain or loss at the time of that trade. Because you could use the 1031 exchange. But with this new tax law, they not only took it out of cryptocurrency hands, they also took it out of hands of every other piece of property except for real estate. You used to be able to do it with a car. You know, if you were buying a light-kinded car, you know, a four-door sedan, trading it in for a four-door sedan, and you made a sale on it, you know, made a profit on it, you know, you could actually roll over your gains. But that's even gone. It's only now strictly for actual real property.
So before we could buy Bitcoin, exchange Bitcoin for real estate, and that was a like-kind exchange, and so that's no longer.
It was just for other coins. So that you used to be able to take Bitcoin, exchange it for Ethereum, and not have a taxable event. That's, you know, if you claim the 1031 exchange, you can no longer claim that. So every time you take a coin and you exchange it for another coin, you now have a taxable event.
Okay, and you're going to explain to people how that works tonight, correct?
Correct.
Awesome. So I'm going to hand it over to you. I know you have a great presentation, so I'll hand it over to you, Elmer, so that you can teach people about cryptocurrency accounting.
Okay, thank you. The first thing I always like to go over is the legal disclaimer. You know, this is informational purposes only. I'm not representing tax law. I'm not representing your individual tax situation, as everybody has a unique tax situation. And therefore, what I say, you know, you should consult your personal tax professional to see if that fits your situation. Also, as we just talked about, in 2018, tax law that came out, things have changed. So anything I say now can be different in the future. So please always make sure you consult your tax professional. I know just recently the SEC made some sort of change in terms of what is considered a security now. And that just happened, I think, this week. So yeah, please always make sure you consult your tax professional. So in 2014 in March, the IRS released their notice, the 2014-21, where IRS stated that they view cryptocurrency as a property. Now, other agencies in the government have different views, like the SEC sometimes looked at it as either a security or a commodity. I'm not here to talk about that. I'm just focusing on what the IRS and the tax consequences are of cryptocurrency. And in that, we have short-term and long-term gains. And what defines a short-term versus a long-term gain is the amount of time you hold the property. And people, you know, normally say, oh yeah, I know it's a year. Well, no, it's a year and a day. You have to have that extra day. If you go 365 days and sell your property, it is still considered a short-term gain. Now, the difference in terms of the taxes is that short-term gains are taxed at your personal tax rate. So if you're at the higher end of the 36, I think is the high end now, and your short-term gains will be taxed at that 36%. If you're into the long-term gains, however, they are normally taxed at just 15%. Some situations it's 20, but most of the time you can be only at the 15%. So if you have a personal income tax of, you know, in the 30s, your long-term gains will still only be taxed at the 15%. So it's worth to try to hold property longer so you can get a better tax rate. As I mentioned just before we started this, the Title 26 of the U.S. Code, that's Section 1031, is no longer applicable as of 2018. You could argue in the past that, you know, when you were exchanging a Bitcoin for an Ethereum, you didn't have a taxable event. The taxable event is, you know, that gain or loss you have on that coin. So if you buy a coin, and say you bought Bitcoin, it was worth $1,000, and the next day you turn around and sold it and it was worth $1,200, that taxable event is the $200 gain you had. And if you lost it, you know, you bought it for $1,000 and sold it for $800, then you have a $200 loss that you track. You track these all year long, and you have an accumulation of a gain or a loss that will be added to your tax return. And of course, it would be separated between what was your short-term gain or loss and what was your long-term gain or loss. And you used to be able to argue that, and, you know, when I exchanged the, you know, Bitcoin for Ethereum, I didn't have a taxable event. I didn't have to track the gain or loss from the Bitcoin to the Ethereum. It was just a like-kind exchange, and you could push forward your gain or loss until you did something with that Ethereum coin. You can no longer do that. You have to track it every single transaction, whether it's Bitcoin, you know, cryptocurrency to fiat or cryptocurrency to another cryptocurrency. They are all now taxable events. Yeah, your losses.
And Elmer, there's a particular IRS form that you prepare to go with people's tax returns, correct?
Correct. Yeah. When you do short-term and long-term gains, it's on the same thing as if you own stock, which is your Schedule D. Also, what I do, because they're not, when you have stocks, your broker reports to the IRS, what your gains and losses might have been. When it comes to cryptocurrency, no one's reporting them unless, of course, that you're in the situation with Coinbase. But I assume that, the IRS doesn't know about these. So I also have the Form 8949 filled out, which actually lists every single taxable event you have, whether it was a long-term gain, short-term gain, or loss, and what the amount was. And that gets included with the Schedule D. Within that Schedule D gets added to your tax return. And then, depending on your individual tax situation, you either owe money or you don't, depending on how much you personally made outside of just cryptocurrencies. And you have losses. If you have losses, they can actually offset your gains and other income up to $3,000 per year. So if you, got washed by the cryptocurrency, when it dropped at the beginning of the year, and you happen to just, out of fear, sold everything and had a bunch of losses, you can actually offset. First, it offsets any gains you have, and then if you have any left over, you're able to apply that towards actually your personal income tax. If you happen to owe money, you could offset that by the loss, up to $3,000 per year. And the unused losses can be carried forward. There's a little asterisk because as a caveat, talk to your personal tax professional. There's a caveat of how much can be carried forward and for how long. So you might have heard of this, the cost basis and inventory methods. When it comes to dealing with your cryptocurrency, the cost basis is just basically what you paid for the coin. So, just like a house, you buy a house for $100,000 at your cost basis. You buy one Bitcoin for $1,000. That is the cost basis. And that determines whether or not you have a gain or loss when you either exchange it for another coin or you turn it back into fiat. That price that it's turned into, that, you subtract that from the cost basis, you have a gain or a loss. Now, to determine whether or not you have a long-term or short-term gain, you have to choose an inventory method. And most are, LIFO and FIFO are the two most common, and you can choose those without having to explain yourself further with your IRS. If you choose any of the others, and there's like another dozen or so, you also have to have accompanying documents to the IRS of why you're choosing these different types of inventory methods. And so usually because you have so many different coins and so many different methods you got to choose, I tell people to stick with the LIFO or the FIFO. And LIFO and FIFO stands for last in, first out, first in, first out. The longer you hold coins, obviously first in, first out is your best option, because it's going to take the coins that you put in first, there were years ago, and then and sell that first, so you have a long-term gain. If have only been investing more recently, sometimes LIFO is actually a better option, because especially, if you bought a coin this year and it was only worth $1,000 at the beginning of the year, and you bought another coin, that same coin later in the year, but it was worth $2,000 or $3,000 later in the year, and you're selling it at the end of the year, you don't have any long-term gains in there. So if you choose FIFO, it's going to pull that more expensive coin that you recently bought as the cost basis. So you're going to have a smaller gain than if you went back to the beginning of the year to when you first purchased the coin as a cheaper option at that time. So I use Bitcoin.tax for the tax purposes. It's efficient. It's cheap. I think their largest package is only like $150, and that for the year. And that depends on just how many trades you had. It starts off at like 30. If you have like 1,000 trades, you only have to pay $30 for the software. I like it because I have an accountant's version. I'm able to log into just my account and see all my clients and just easily access theirs and figure out, it gives you the option to choose, and it shows you, if you choose LIFO, this is what your taxes will be. If you choose FIFO, this is what your taxes will be. So it's very robust in those terms. It also exports the 8949, the Schedule Ds, and if you're using TurboTax doing your own taxes, it'll actually directly link into TurboTax for you and import the forms. So that's the software that I recommend using.
That's Bitcoin.tax, correct?
Correct. Yep. Bitcoin.
And one point of clarification. So people can't choose to do some coins in last in, first out, and some other coins in, first out. You
Actually,
have to choose one method,
no,
or can
you
you
can't.
mix?
You can mix them for coins, but you got to stick with that for the same coin. So if this year you chose LIFO for Bitcoin and FIFO for Ethereum, next year you got to choose LIFO for Bitcoin and FIFO for Ethereum. You got to keep that same inventory method for the coin that you choose. They are coin specific every year. Now, if for some reason you change it, you can change it, but you got to then write to the IRS. You got to give them documentation as to why you're making this change now of inventory methods. And if you keep doing it back and forth every year to avoid taxes, they're going to catch on to it and not allow it. But it is coin specific. But then again, you just got to stick with it, whichever one you choose for that coin.
Great, thanks.
Yep. So some people are actually being paid for services or even paying their employees through cryptocurrency. These are treated as regular wages. So if you have an employee, you do have to withhold taxes just like you were paying them cash. If you're paying a contractor and you pay them more than $600 worth of cryptocurrency in a year, you still have to issue the 1099. And it is also still subject to backup tax withholding if that is applicable. And if you're a business and somebody, QuickBooks allows me to accept Bitcoin through my payment services. So if somebody wanted to pay me in Bitcoin, they can, but then, for me, that's income. And then you have two taxable events happening. So if someone had a $1,000 bill with me, they paid me one Bitcoin that was worth $1,000. I know that's not, I'm just making it simple for discussion purposes. The two tax consequences I have are one, I have $1,000 worth of income I have to track in my business. And then I own this piece of property. So when I exchange it or sell it, into either fiat or some other coin, if I decide to invest it in something else, then again, I'm going to have a gain or a loss that I also have to track. So there's two things you got to track when you receive cryptocurrency that is either a gift, is from mining, is from employment, is from services that you've rendered.
Some companies, Elmer, think that if they take payment in cryptocurrency and they make payment in cryptocurrency, that they don't have to issue a 1099 because they're not paying them in cash. And so that's not true, is it? That's what you're saying? They have to issue a 1099 to people that are gifted cryptocurrency for services or other means, right?
Yes, correct. Anytime, and even I know I mentioned gifts, and I didn't go into detail. I had a client who was actually gifted $1 million worth of a coin, and you think, well, then the person, it's a gift, right? Well, yeah. So the person receiving it doesn't have to pay taxes on it. However, the person giving it does have to file a gift tax return, and there are limits of how much you can give away before you have to pay taxes on that. So again, if you're the recipient of any gifts and they're large, just make sure that whoever gifted it to you is talking to their tax professional about whether or not they got to file a gift tax return. But anything else that you receive, if it's not a gift, if you're receiving income for services, for wages, for whatever, it is considered income for you. And even if somebody doesn't give you the 1099, you should still report it on your income. If you're a business, obviously it just goes into your business income. If you're a person, and it goes into your other wages, other income category on your tax return. If you're doing a side job or whatever, anything over 600, has to be reported to the IRS. And not filing 1099s can have up to a $500 fine for each occurrence. So the businesses really need to try to avoid not reporting the 1099s, even if they're just strictly using cryptocurrency.
And just one last clarification on that, Elmer. So when you get commissions, for example, in cryptocurrency, how is that accounted for? Is that accounted for the value the day that it's actually sent to you?
Yeah, and I actually was on another screen and I kind of skipped over it. So when you receive a coin, there's multiple ways you can choose how to track it. The IRS is only right now sticking with the day. And as we know, it could start off at one thing, the morning, be something else in the afternoon and finish something totally different at night. So you get to kind of choose, you know, do you want to use the open, the middle, the close? You get to kind of choose. The IRS hasn't come down on that yet. They're more worried about, and I'll talk about it in this next slide. They're more worried about people who aren't recording it right now. So, but if you do use exchanges, they usually have a timestamp. So like Bitcoin.tax ties into a dozen or more exchanges to import your transactions. And, you know, the exchange knows exactly the second it was sold and what the price was at that second, and it will track that for you. So you don't have to go back and be like, you know, I have to find, you know, I did 10,000 trades and I got to find the price for all of them. No, if you did, as long as you did them inside an exchange that's keeping track of them, it will know down to the second what your price was.
Mm-hmm. Great. Okay.
So this is the biggie, tax fraud. So, you know, if you own a business and let's say you wrote off deductions you weren't supposed to write off, you know, you get a little slap on the wrist. If you have income, even from cryptocurrency, that you do not claim, it's not a slap on the wrist. The IRS considers that tax fraud. And if you think like, well, how do they know? Well, right now, and I did this earlier this year, so this probably changed. The IRS has over 13,000 Coinbase account holders information. Whoever bought, sold, sent, or received digital currency worth 20,000 or more between 2013 and 2015. There is another exchange. It started with a bit. I'm sorry, I don't have it. It also released a statement that it was going to start reporting to the IRS. You know what? It's activity on its individuals that are going through that. I don't know what limits they were putting on it. The IRS went to court wanting everything from Coinbase. Coinbase fought back, and the courts decided not everything. You're going to get anybody who had over $20,000 worth of transactions. People think that, well, isn't it, you know, anonymous? No, at best it's pseudo-anonymous. It's because, you know, it's just like a pseudonym when you write a book. You know, like Stephen King had a pseudonym for a while. And for a long time, nobody knew it was him. He got away with it. But then somebody made the connection. And it didn't take much. And then all of a sudden, okay, well, that's not, you know, everyone knows who this author is now. And it's the same thing with your cryptocurrency. You know, you have to give them, some places want your, you know, your driver's license back and forth, you know, your social security number, you know, your email address. Any one of these things can very easily be tracked back to you. And yeah, no one's currently doing it. The IRS is actually trying to it. In a Forbes article, IRS said they were ethically hacking, trying to connect people to like email addresses and cryptocurrency wallets. So, you know, if you think you can hide it because you know, you're anonymous and you know, the IRS will never find out, and that's just not true. It's just not a great way to go about it because of the penalties. And what the IRS considers tax fraud is anything that is willful or intentional falsification of information on a tax return to avoid taxes. So knowing that you have to report your cryptocurrency gains or losses, deciding not to report them to not pay the taxes is tax fraud. Civil penalties, if you're doing this just by yourself personally, are up to 75% of the owed taxes. So besides, you know, if you end up having a bill of $100,000 of owed taxes you try to avoid, now you owe $175,000 because of that 75, up to the 75% of the owed taxes. But on top of that, they can also slap you with criminal charges, and that ranges, you know, and the civil is not the tax fraud. The civil is like I had said before, you know, if I'm a business and I wrote off more than I should have, that wasn't really business. You know, I went to Hawaii and in Europe and spent $10,000 on a trip, and I wasn't supposed to write that off. And the IRS says, well, you owe us, you know, 5,000 of that should have been taxes. Well, now I owe 5,000, you know, and 75% of that on top of that. That's just the civil part of it. But if you're avoiding paying taxes through tax fraud, such as cryptocurrency, hiding your gains, it is not considered criminal. And the penalties range from 100,000 to 500,000. That depends if you're doing it personally or through a business. If you are personally investing and you hide it, you're looking at $100,000 penalty and 5 years in prison. And this is not up to. It's $100,000. If you're a business and you're investing in cryptocurrency in a business and you hide your cryptocurrency gains and losses, it is a $500,000 fine, and you still end up going to prison for 5 years. And I don't know if anybody knows the federal penal system for the United States. There's not a lot of wiggle room. It's not like you know, the states where you can say, hey, I'll plead guilty if you you know, won't let me serve 2 years or whatever. There are guidelines that if you plead guilty to tax fraud, it's $100,000, 5 years in prison, no negotiations. So this is just not
No,
something.
I had to bring a couple of things up here.
Sure.
Uh, this is a weekly webinar to encourage people to invest in cryptocurrency. So, so, uh, so anyway, just a little joke there. You're saying that it's the IRS and the United States government has seen that investing in cryptocurrency has become extremely profitable for many people, and they want their piece of the pie. And
Yeah.
what you need to do is you need to have Bitcoin.tax, and then there's another software that you recommend also. What's the name of the other one?
You're talking about the coin tracking dot, I think it's dot info.
Yeah,
So
cointracking.info.
yeah, so I don't personally use coin tracking, but I know if you're a day trader, coin tracking is for you. It's kind of like, the software that stock brokers use for their day trading. So it's really great for day trading. I'm not happy with it in terms of like end of the year reporting. I ran a test. I put my investments through Bitcoin.tax, through cryptocurrency.info, Bitcoin.tax that I owed money, which I did. Cryptocurrency, coin tracking said I didn't know anything. So I was like, well, that's an issue that I'm not happy about. I don't know what's going on in the back end. But I did some research, and it's great for the day trading stuff.
Okay, and I was just making a joke about the comment earlier.
Oh yeah, everyone should be investing. I know I get a little dark and heavy in this section only because the IRS said that I think it might have been between these dates, the 2013 and 2015. It might have even gone up to 2017. It was like something like 400,000 people in the U.S. who invested in cryptocurrency, and there was only like 400 who reported it. So the IRS is a little pissed about that. So that's why I have a feeling like if you're caught in the next few years not reporting your cryptocurrency, you're probably going to look at criminal penalties. If down the road everyone's reporting it and for some reason you forgot, didn't know it, or whatever, you might be able to negotiate civil penalties. But right now they are really upset. They're really they're really going hard, and they're going to make examples of people that they catch, which will be the criminal penalties. It's just not worth it. I had some guy on doing a free consultation on a phone call with a guy, and he was like, I made $100,000 in cryptocurrency and I don't want to pay taxes on it. I'm like, yeah, but did you do anything for the $100,000? And like, well, the government didn't do anything for it either. Like, do you drive on the roads? Do kids go to school? Like, I know I'm not saying the government's great, but taxes are supposed to be used for certain things. And, is it really worth going to prison for 5 years and losing $100,000 and a fine just because you're not want to pay your taxes to the government?
Absolutely.
So there is some good news in terms of the civil penalties, not the criminal ones, the statute of limitations. So the IRS has it the 3 years after the return's due date to actually assess penalties. However, if they look at those, within that 3 years, they look at a tax return and they do find that you underestimated your income by more than 25%, which, especially in some of the cryptocurrency, people who are trading, that could vary. Their gains could very easily be more than 25% of their income. Then you better sit down for a long haul, because at that point they're able to go back 6 years. However, if they find that you committed tax fraud, which is that you had this cryptocurrency and you made $100,000 and you didn't report it because you don't want to pay the taxes, well, then all bets are out the window. They can audit your every tax return since you turned 18 and started filing them if they felt like it. And depending on how old you are, you could be spending the next year just trying to respond to the IRS's audit of all your tax returns.
I thought audits only went back 7 years.
They can expand to 6 years if your income is underestimated by more than 25%. But if you find you committed tax fraud, there's no limit. Oh. They can audit you from the day you turned 18.
How often do you have a client that's actually audited like that? I've never lived a long time, never really met an honest person that went through that.
Yeah, no. If you're honest, you're not going to do that. Again, these are the rare cases of people who and this was set up for people who create these shell companies, do offshore accounts and try to hide everything. You know,
Hmm.
the government assumes they've been doing it most of their adult life. So if they catch the tax fraud, they want to audit everything because they think that they're going to find 20 years worth of tax fraud that they've been committing, and they want to find their money and assess penalties and such.
So if somebody has a Bitcoin dot tax, Elmer, is that something that they get themselves, or is that something that they can
Yeah,
send you the reports, or how does that work?
yeah. The easiest way is to do it themselves. It does. They changed that. It used to be I have to buy it for you as the accountant, but now they've set it up that you can create it. You can buy it yourself. You figure out which one you use, and always buy a little smaller. So let's say you think you have, I might have 1,000 trades for the year. Buy the package is just below that, because you can always upgrade. You can't always downgrade. So unless you know for sure exactly how many you have, then you can buy that package. But then what you do is, if you wanted to work with an accountant who's using Bitcoin.tax like myself, you would just tell me your email address that you've set up the account, and I would go in and request access. It would then send you an email saying, Elmer Howard at DNS Bookkeeping wants to have access to your account, and you say approve, and then I can just go in and see it. I can make changes, because sometimes it also tells me if things are missing. So I go through it and audit it, make sure okay, you have more Bitcoin sold than bought, so we're missing transactions. And sometimes it's simple as they're getting better at this, but sometimes the system messes up the time code by like 2 hours. And if somebody who's trading all the time, they bought a coin and sold it 5 minutes later, or sold it 2 hours later when, because the price was changing, whatever. And if Bitcoin.tax screws up the the time code, it might think that you sold it before you bought it. So I'm able to look through, because it flags everything that's like that. So I'm able to go through and just, figure out what it is, talk with you about it to get it up to date, and, figure out what's the best, inventory method moving forward, and then get all the forms ready and filed with your tax return.
So you have a question right here on the other facts, FAQs. Do I have to pay taxes when I receive a new coin from a fork? So if you owned, for example, BTC Bitcoin, and you received 1 BCH for every Bitcoin that you owned, would that be a taxable event?
Yes. It's just like receiving a gift. It's just like receiving commissions or mining. And I don't know if I covered that, but if you're mining coins, if you're investing into a company that mines coins, if let's say you put $2,000 in and they go and mine Bitcoin, your first $2,000 you get back. There's no taxable event, because that's the $2,000 you originally invested. Anything over that, it goes into that two-step category. It's income when it comes in, and then you have a piece of property. When you sell it or exchange it, you have to track it then. And the same thing was happening, with the new coin. Some people argued with, if somebody bought a cow, and it was pregnant, what's their cost basis? Well, you're actually able to split the cost basis to the calf. But the caveat is the buyer knew the cow was pregnant. Unless you can prove to the government that you knew that the coin was going to split, and that's why you bought into it, then your cost basis can be split up. Some of what you actually bought the original coin for can go into that fork and actually saves you, money. But otherwise, yes, anytime it splits, you're going to get, it's going to be treated as, the cost basis is whatever it's worth on that day. So if, if you have $1,000 of Bitcoin, it splits off, and the Bitcoin Cash was worth $100. Well, you have that $100 worth of income, and now the cost basis for that Bitcoin Cash is $100.
So you're saying that all these 12, 13, and 14-year-old kids that are mining currency are going to have to start doing their taxes and submitting to the IRS, right?
Yeah, actually, I don't know I don't know the minor what the laws are about minors in terms of tax returns. I would definitely talk to a tax professional about. I know there's going to be obviously less issues and less reporting necessary for a minor, but they should at least talk to their parents, tax attorney, and to know tax professional, just to be planning and knowing what they need to handle, so that when they turn 18 they don't have any problems.
Right. So if there was one or two takeaways from this, do you have a screen with your information for contact, your contact information? Is that the next screen?
Oh, I have the website, the
Okay.
dnsbookkeeping.com. Go there.
Okay.
There's two places. There's a regular contact form to send me a message. If you want to email
Okay.
me, my name, Elmer at dnsbookkeeping.com. There's also a scheduler on the website. So if you just said, I just need to talk to Elmer for an hour, you can go in there and you can book an hour with me through the scheduler that's on the website as well.
Okay. And what's the charge for that consultation?
That's free.
Okay. So the initial hour is free.
Yeah. If you
Okay.
just got questions, you want to, I like to educate people, and then if you need me, I usually wow them, and they just want to work with me. And if they just needed information, I'm happy to know that I saved somebody a potential headache down the road with the IRS.
Absolutely. Well, Elmer, is there anything else that you'd like to highlight before we wrap up for this session?
No, I just, keep track of your currency exchanges, try to keep track of your wallets and everything, just know where they are, and, connect to bitcoin.tax. It's, a wonderful resource. If you're good at doing your own taxes, you might even do it yourself. And if anybody needs, just assistance even looking at it, I've had clients say, hey, I've got it all in here. Can you just review it, make sure it looks right? And I'll file my own taxes, and then I just give them a small rate for me to go in and just take a look at it. But yeah, definitely just keep on top of it. Make sure you're tracking it so that you can properly report your gains and losses.
And the other tip is, if you don't want to be caught, don't use Coinbase.
Well, yeah. I mean, if you want to hide, which I don't recommend at all.
Right.
If you're going to more than $20,000, don't do Coinbase, because Coinbase will already have reported on you. But same as having a brokerage stocks. The broker's going to report any capital gains or losses you have on your stocks.
So as soon as you buy or trade $20,000 with Coinbase. But anyway, Hey, thanks, Elmer. This has been absolutely fantastic. I think your practice is going to do nothing but get much bigger, because people are trading crypto pretty actively. There's institutions, there's family offices, there's now hedge funds, but a lot of people are very serious about making money in trading cryptocurrency. And let me ask you just one really quick question. So let's say, for example, I got involved in a company and I bought a package, or I invested in this company, and I didn't buy cryptocurrency, but as part of that package, right? As part of that package, they gave me cryptocurrency. Is that going to be a taxable event? So I get involved in a company, I invest $2,000 in the company, or I buy a $2,000 package of product, and they give me 10,000 of their tokens. How is that treated?
Yeah, it would be treated as kind of like a gift. You have to start tracking it in terms of selling it, exchanging it. You don't necessarily, you have to talk to your tax professional to find out exactly if it's considered income for you, because it sounds, it's kind of like stock. If you put money in, you get a stock, and then you go and sell that stock. You don't have an initial taxable consequence for receiving that stock, but when you go and do something with that stock, then you have a gain or a loss. So I would assume it's the same thing. If you're giving money in and you're getting some tokens, it's kind of like that equity. You don't have any taxable event until you do something with that token.
And so you just want to record the amount of tokens and the price at the time of
that it was that day. Yeah.
Perfect. Okay. All right. Well, thank you so much for being on the CryptoRocho How to Profit from Cryptocurrency course tonight, Elmer. This is absolutely fantastic. People need to get in contact with you and start using Bitcoin.tax, maybe looking at cointracker.io if they're doing day trading.
There is a quick Q&A I see on the screen. Do you want me to answer that?
If you'd like to, yes.
Yeah, does Bitcoin.tax and CoinTrack deduct all the exchange fees, et cetera, per each transaction? As long as the exchange that you're using exports that data, yes, it will do that.
That's an excellent question. All right, because you want to deduct the fees.
Correct.
So again, thanks, Elmer. Do we have any other questions that you see there?
No, that was the only one I saw pop up.
Okay, super. Hey, I appreciate you for taking time to be with us tonight, and we'll post this on our websites and also on YouTube channel so people know how to get in touch with you and hire you as their cryptocurrency tax professional.
I appreciate that. Thank you.
Okay, so thanks everybody. This is Tim Rocco, and it's I think it's the 24th of October. Yeah, 24th of October, 2018. And so that would mean next week is the last day of October. It's going to be November, pretty soon. So we'll be having holidays coming up quickly. So anyway, God bless. Good night, and we'll talk to you soon.